Hello everyone, welcome back to the channel. Today we are looking at Merck, ticker MRK, listed on the YSE. This is a major US pharmaceutical company, and on my 4-day chart, MRK has just shown a new buy signal after a sharp pullback. Before we start, this video is for educational and market observation purposes only. It is not financial advice, and it is not a recommendation to buy or sell any stock. Always manage your own risk. Now let's go straight to the chart. MRK recently had a strong move earlier this year, pushing toward the 120 to 125 area. But after that, the price started to weaken and pulled back sharply. Right now, the stock is trading near the 109 area, and my system has generated a buy signal on the 4-day time frame. For this setup, the key zone I am watching is the 106 to 109 area. This is not a breakout buy setup. This is more of a pullback recovery setup. In other words, the stock is coming back into a support zone after selling pressure. And the question now is whether buyers can defend this area. The first important support zone is around 106 to 105. If MRK can hold above this area, the signal has a better chance to develop into a controlled recovery. But if the price breaks below 103.5, then the setup becomes much weaker, because that would mean sellers are still in control and the support zone has failed. So for me, the risk zone is around 105 to 103.5. Below that area, I would be more careful. On the upside, the first target zone is around 115.5 to 119. This is the nearby resistance area where the stock may face selling pressure again. If MRK can recover into that zone, I would watch how the candles behave. If the candles become weak or rejected near that level, the move may pause. The second target zone is around 120 to 125. This is a stronger resistance area because it was the previous upper range before the pullback. For MRK to reach this second zone, I would want to see the price reclaim the 115.5 to 119 area first and then hold above it. So technically, the setup is simple. MRK has a buy signal after a pullback. The buy zone is around 109 to 106. The risk zone is around 105 to 103.5. The first target zone is 115.5 to 119. The second target zone is 120 to 125. Now, let's combine this with a fundamental picture. Merck is not a small speculative stock. It is one of the major healthcare and pharmaceutical companies in the United States. Its key growth driver is still Keytruda, the cancer treatment drug. In the latest reported quarter, Merck's sales grew, and Keytruda continued to show strong demand. Keytruda sales were around $8 billion in the quarter, up about 12% year over year. That is positive for the business because oncology remains a very important area for Merck. The company also has newer products and pipeline development, including areas like pulmonary hypertension and future oncology indications. But there is one major risk investors continue to watch. Merck is still heavily dependent on Keytruda, and the market is concerned about future patent expiration risk. Another point to watch is Gardasil. Gardasil has been an important vaccine product for Merck, but recent sales were weaker, especially due to softer demand in China and Japan. So fundamentally, MRK is not a perfect story. It has strong cash-generating products, but also some concentration risk and pressure in certain business lines. This is why I think the chart is important here. If the fundamentals are mixed but stable, the technical setup can help us define the risk more clearly. Right now, MRK is sitting near a support zone. If buyers step in around 106 to 109, this could become a defensive recovery setup. But if the stock loses 103.5, then the signal may fail, and the price may need more time to build a new base. For short-term traders, the most important thing is not to guess. The key is to watch confirmation. I want to see whether MRK can hold above support, and whether the next 1 or 2 candles can show follow-through. A good recovery should show buyers defending the zone and pushing the price back above 110 to 112. If MRK can do that, then the first target zone at 115.5 to 119 becomes more realistic. And if it can break above that area with strength, then 120 to 125 becomes the next major upside zone. But if MRK fails to hold above 105 to 103.5, then I would not force the setup. So my conclusion is this: MRK is showing a buy signal on the 4-day chart, but it is still a recovery setup, not a clean breakout yet. The setup is valid only if the stock can defend the support zone around 106 to 105. The upside zones are 115.5 to 119, then 120 to 125. The risk zone is 105 to 103.5. That's my market observation for MRK stock today. If you find this analysis useful, follow the channel for more stock signal breakdowns, support and resistance zones, and risk-focused chart